Political tensions between the U.S. and Iran continue to simmer, with President Donald Trump announcing plans for further sanctions. Joining us now to explain the implications for the oil market is BNN Bloomberg's Andrew Bell. Good morning.
Good morning.
Yeah, so what can we expect?
Well, oil is around $58 US, near 3-week highs. But it would be wrong to say there's been a massive rush in on fears of a disruption in supply. It's still down from more than $70 last fall. We do know, of course, Iran adjoins the Strait of Hormuz, through which 20, even 30% of the world's oil passes in the Persian Gulf region. However, Iran in the past has rattled sabers and said, oh, we'll block the Strait of Hormuz, watch out. They never have, or in a decisive way, because they know the U.S. Navy would be down on them like the proverbial ton of bricks. Now, there's oil and oil around the world, and we have seen some strength in the past week in oil from Nigeria, from the North Sea, implying that some people may be trying to secure stocks of non-Strait of Hormuz oil. But there's certainly no spike in oil prices right now.
Are we looking for the spike? Because that's kind of what it sounds like.
Yes, I mean, obviously, if it goes and heaven forbid, if it goes to shooting, that will put a premium on Mideast oil. There's almost certain to be disruption. Certainly, it'll cost more to get a tanker to move the oil, and ultimately, we as customers will pay when we fill up our wretched SUVs. However, one big wet blanket, I'm sorry to be a wet blanket, but one big downward factor on oil prices are huge U.S. exports of oil. They keep producing record amounts, and RBC says right now in the Gulf of Mexico, there's record numbers of very large crude carriers taking on U.S. oil, ready to bring it to Europe. So the Americans are exporting oil in a way we haven't seen in decades, more than 3 million barrels a day. So there's a lot of supply coming from that source anyway.
Okay, very fluid situation. Andy, thank you.
Thank you.